It is 10:30 a.m. on the West Coast, 1:30 p.m. on the East Coast. It's Value After Hours. I'm Tobias Carlisle, joined as always by Jake Taylor and Bill Brewster. What's happening, fellas? Market's in turmoil.
Ooh. Well, I'm off to a strong start. I just spilled half my drink into my lap, so I'm feeling pretty good.
At least you didn't spill all of the drink in your lap.
Yeah,
that's true.
What's up, Billy? You surviving out there in Flow Rider?
Yeah, man. I'm glad this hurricane's going west, but hoping Sarasota dodges the bullet that appears to be coming at them. I got two friends there, and last time they were tearing out a lot of their house after one. So I'm just glad I'm not having to relocate with my grandmother to some other place. It'd be a fucking mess.
How about you, JT?
Just living that sweet suburban
Wholesome street life.
Yeah, exactly. Strong into the baseball swing, so it's all happening. Baseball and soccer.
Let me give a little shout out. Samson in Dubai, Jack in Yorkshire.
Where are they at?
Jonathan, Brandon, Mississippi. Tbilisi, Helsinki, Leeds. Sweet. What's up, fellas? Nice to have everybody joining from everywhere. What have we got up on deck? You got an interesting backdrop today there, JT. What's the perfect equality line?
Well, obviously we'll get into it, but we're going to be talking about the Genie coefficient.
Ooh. Is
Yes.
that how you say that?
I believe so. I don't know. Is it? Am I saying it wrong?
Is that Gini? Genie?
Gini. Yeah.
I've never heard anybody say it. I've only ever read it.
I could be saying it wrong, so we'll see. What you got?
Since August 15, the market has done a swan dive, and we are now for the year or from the height, technically in bear market territory again, 23% down. When I was writing these notes this morning, we were actually up a little bit, but we're down now. So I just wanted to take a look at CAPE, the implied returns, my definition of a bear, what's happened to earnings.
Put on your crash helmets, everybody.
I think it's cheery to realistic once you understand what it implies, I think.
All right. BB, you got anything on deck?
Yeah, I guess it's probably along the lines of Tobias. I got a tweet that had me thinking.
All right.
So we'll get into it.
Well, let's start with TC, and then we can transition into BB, and then we'll go to JT.
Let me give you some of these stats. So CAPE currently 27. Nobody cares about CAPE anymore, but that is very, very high still. Long run CAPE is now 17.4, which I thought was kind of interesting. When I started doing this a long time ago, the long run CAPE was 16, so it's crept up, and that's running back to like S&P precursor, S&P 500 precursor data. So the S&P 500 kicked off March 3, 1957. There was a precursor to that.
It's pretty good they get a whole nother turn after like hundreds of years of data, or 100 years.
Yeah, that's right, because it kicked off in 1850, and so this data runs back to 1850. I don't know how good it is, but it seems to match up to what everybody else basically concludes. So I think that the data is reasonably, it's roughly right. If CAPE goes to its long run mean, the implied level of the S&P 500 is about 20. Well, it's 2328. It's silly to kind of quote it to all those four digits, but say 2300 to 2350. That's about the long run average.
Where are we at today?
We're at 36. Well, 3660 when I wrote it, 3620 just before it came on. I don't know exactly right now, but we're about 36% over.
Okay.
That's quite a long way to fall. I think it's actually so far that it's, even if we got like a 2007, 2009 style drawdown here, I still think it would probably do what it did then, when bounce reasonably high, and then it would take another cycle for us to fully clear the deck. I just don't see how maybe it'll get there, but it would just, a crash of that size is almost unimaginable. So the total return since 1850 is 9.1%. That's made up of 4.8% dividends, and the other portion of that, whatever that works out to, 4.3% or something, is index return. Currently, the index. So using that, this is the Husband method. I use my own inputs, but the Husband method assumes that you mean revert to the average over the next decade and you collect dividends along the way. So you don't immediately fall to the average, you drift down towards it. And there's underlying growth as well in the earnings. But that total return is 4.1%, which includes currently the dividend yield of 1.7%. So an index return of 2.4% per year for a decade. And that's how it gets there. So one thing that I've been talking to, yes, that 9.1% is nominal. Real, that's like, what's that, negative 0.2% at the moment.
Yeah.
And after tax,
it's more like 6, right?
It's even worse than that.
Yeah.
So I had the definition of a bear I always found really unusual. I've got a completely arbitrary definition of a bear too, but the current definition of a bear is down 20% from the peak. And you can get these things like we had and you can see it in lots of assets, house prices, lumber, like everything we've talked about on this podcast for the last few years, where it runs up a lot. Like it could spike and then fall back down. And really it's round tripped, but technically it's in a bear market. To me, that sort of makes no sense.
Yeah.
So my definition of a bear is just to look back 12 months ago and say, if you're down more than 20% from 12 months ago, then you're in a bear. Now I get that that's as arbitrary as the other definition, but the difference is that you don't get 2016 being called a bear. You don't get 2018 being called a bear. The only times that you get to call a bear are March 2020, then 2009, and the third and fourth quarter of 2008, and then 2002. It really only identifies the real generational crashes. So when you get those events, the forward returns are very, very good. If you just wait until these, like they only come around every 10 years or so, they're very, very rare. So it's not much of a strategy just to sit around waiting for them. It's just when they do pop up, the forward returns are very, very good.
Would you call this segment Build a Bear Workshop?
That's I should have. I will now. It'll be up on the title. So we are currently just trading a little bit above that level. So we don't have to fall very much. I think we're at like 18% down year on year.
Okay.
The market last year bottomed towards the end of the year on October 1st, and then it ran up 10% through the end of the year. So what that means is that, and October 1st this year is a Sunday, so next week and through the end of the year, we need to rally about 5.5% in order to avoid that my idiosyncratic arbitrary definition of a bear, which is down 20% year on year. And that's a very, very rare occurrence. The last time we had like 1 month of it, March 2020, and then preceding that was 2009. So that's how rare they are in the S&P 500.
So with yours, we could actually go up a little bit from here. And if the 12 month was up, higher, then we can go into a bear without actually going down to it.
Right. That's the implication.
That's curious.
It is, but that's how far. We've fallen very rapidly this year. This is one of the worst years on record in terms of how quickly we've fallen. I think I saw a tweet the other day. I'm going to forget all of the dates, but there were only 3 dates that were worse: 2008, 1931, and there's another one in there that I can't remember off the top of my head. But those 2 dates are pretty bad ones. 31 was the Depression, and 2008 was the credit crisis, and one of the worst drawdowns. That's the worst drawdown in the S&P 500. Down 56% year on year, or from the peak.
Now do 60-40.
Yeah, well, I don't have that data, but yeah, that's nasty too. I think the thing that's driving it partially is earnings topped out for the S&P 500 in December at $210 for the index. So index is at 36.20. Earnings for the index are at 210, which is how you get a PE, a single year PE of 18 for the index. And currently March 22, they're at 203. So they've fallen about 3% since the start of the year, which I think is probably what's driven the decline in the market. But I kind of think that all of that put together means that there's a reasonably good chance that we do go into my definition of a bear, which is a real drawdown. And then typically what's happened in the past when that's happened is that the duration is about 3 to 6 months. So it's pretty short once you go into it. Having said that, it can draw, that's when all of the selling actually occurs. So everything sort of comes before then as a precursor. And I have no idea where the bottom is, but if fair value is around 2,300, then, probably that's in play. 2,300 is a possibility. And it's also possible to go under averages, even though
wait,
for a long time.
Are you saying that you can be under an average? I'm not buying
Evidently, that's how you get the average. It's got to be about halfway between the two. But I don't know. I've never seen the other side of the average. But that would be like, who knows what the market's going to do? No one knows. But I sort of feel like you can't get any sustainable returns until you flush the system. And we haven't flushed the system for a long time. And every time we get close, the Fed turns around and lowers interest rates and pumps out a whole lot of liquidity, and it just props everything up again. And I think that'll happen again this time. I do think they'll pivot. But if you have a look at what happened in 2000 and 2008, they pivoted a lot closer to the top and didn't make any difference whatsoever, because it's more psychological than it is, actual. So one possible scenario, worst case scenario probably, is that we trigger that sometime before the end of the year. We have 3 to 6 months of chaos. We go down a lot through that chaos, and then we get a sustainable bottom, and hopefully from there we rally. So I would say that the next 9 months could suck, but probably be looking pretty good by about this time next year.
Sounds like a reasonable base case. I'm not sure everyone's ready for that.
No, that's kind of why I'm talking about it, because I'm not ready for it really either. I'm getting tired of selling off all the time and looking dumb. So I want to rally.
Get those man overboard plans created now before it's too late. Come on, guys.
I don't know. I think you had to do it last year.
Well, fair enough. But
you got time. I mean, you got time now.
Chance to do it is today.
Yeah, maybe. Depends what you own. A lot of stuff, it's too late. I mean, not to say that it can't go lower, but the time to have it was 6 months ago.
I think we said it back then too, but
yeah.
I think you can have lots of opportunity here. I don't think this is over by any stretch of the imagination. I think if you get 3 to 6 months of chaos, that you really do get those chances to buy the very best stocks on sale for prices that you won't see for another, with any luck, 5 or 10 years, but entirely possible that we get something in between. Like, I kind of feel like this might be a 70s style thing where you get a big crash and a little rally, and then you get another crash that finds a lower low, but it takes 5 years to get there.
Yeah, you'll probably see those prices again, but it just might take a long time as you're going to go lower than where you were to get back to them.
At least on a multiple basis, maybe not hopefully not on an index basis.
I'm just saying, don't expect a bottom tick.
Oh yeah, no, impossible. You just want to make sure that you've
just get a lot for your money as you're buying.
Yeah, I think as the market gets really chaotic, you want to, the tendency, and I saw this lots of times when I was talking to people as investors in the following 2009. There were lots of people who, when it got really chaotic near the end of 2008, beginning of 2009, that's when they sold everything out because they couldn't take the sell-off anymore. And then, it was like 2015, they were still waiting to get back in. And I don't know if they ever did since then, but it's entirely possible that the same thing happens this time, that you get this chaotic selling, and the chaotic selling is the signal to buy, not the signal to sell. But
there you have it.
Anything can happen.
Easier said than done.
I will let people know if we trigger those things, and at that point, I'll be ripping up the floorboards and stuffing them into the boiler. Get that thing going as quick as I can.
Yeah, we may need real jobs so that we can have income that we can put to work.
Let's not go that far. It's not that bad.
Oh,
dude, I'm gonna start laying tile. The guys that are quoted me to lay the tile at my house quoted almost $20 a square foot.
Oh.
Does that include the tile?
No. I just said, fine, we're not doing the job.
That's just the labor?
Yeah.
Yikes.
Yeah. And now we got a fucking hurricane coming, which is going to take every tradesman in the state. They're going to go over there to fix all that stuff. This is going to be a mess.
It's a good thing you got that flooring background.
Yeah, well, I just know enough to know I'm getting screwed. And I told the guy, The guy quoted it was $14,000 to do a shower. I'm gonna have tall ceilings, but
40-foot ceilings.
well, I said to him, I said, how many hours do you think it'll take you to do a shower? You think 40 is sufficient? And he was like, yeah. And I was like, okay, that's $350 an hour to lay tile. And he's like, well, that's not how I quote. And I said, well, that's how I think about it. So
Yeah.
we're this conversation's over. It's wild, man. So I told the builder, I said, just shut it down. I said, you guys are all going to need work in 6 months. And I bought a house so that I didn't have to be forced to make decisions. So board it up and we'll talk later.
We found your inflation.
Yeah. And I'm not getting bent over without at least trying to avoid it for a little while. So we'll see. Could backfire, but I don't think it will. The tweet that I liked, I said value after hours topic. I sent it to myself as soon as I saw it, so I'd be prepared. It was from Shadow Stock. Shout out to you.
Yeah, that's John.
Yeah. 1930, thinking the worst was over, Graham went all in. He used margin leverage what thought would be terrific returns. But the worst was not over. The Dow collapsed. Graham had his worst year, losing 50%. He personally was wiped out in the crash. And that's from Batnick's Big Mistakes.
I'm glad you said that.
So,
because the thought had occurred to me that I might want to get long a little bit on margin through this. So that's thanks for the reminder.
Yeah. So, you got to make it to the other side. I'm certain that there are things to buy right now. I am also certain that you can get squeezed out of them if you do it in a stupid way.
Speaking of margin, yeah. I've been kind of wondering, have you seen some of the moves in the bond market lately? How have there not been more like leverage bond funds, risk parity blowing up with those kinds of moves? I mean, they're just like monster moves that I don't know if we've ever seen those that fast in our lives.
I've thought the same thing.
What's happening?
I don't know the answer.
Do we have to wait for Powell's book to come out where he talks about how he saved all these? Yeah.
I thought the other day, these moves are amazing. And like there's a counterparty to every single one of these moves. There's somebody on the losing side of every single one of these moves. And there's been nothing. And these are moves like the gilt, all of those things, the moves in those are just astronomical.
And we know that these guys are on leverage doing that because the returns are, there's nothing there. I mean, with the interest rates where they were in the toilet, I mean, you had to lever up to get any kind of real return.
The moves are usually so small. Yeah, that's it. You got to lever up to get a reasonable return. Yeah, I'm amazed that there hasn't been more people blowing up yet. I guess, I don't know. I don't get it.
Well,
orderly liquidation.
Evidently.
When do funds send out their communications to shareholders?
Coming up on an end of a quarter here.
Yeah. So we'll see how the redemptions look next month.
Yeah, there's a good comment here about it just kind of went past. I don't really know enough to. Speaking of CAPE and earnings, this is from Matt Hansen. How much do you think gap mark to market will affect Q3 earnings? Seems we're in for a shock. No.
I don't think this stuff matters. I think the market's smarter than that. I really do, especially in aggregate. I think if you think that that's like, I don't know, maybe some computers will turn on and off based on it. That's possible, but
that's fair.
This is just fucking noise, stuff like that.
What's the percentage of companies that have material marketable securities as part of their asset base that flow through into an income statement? I have to imagine it's not that much. Yeah, it's insurance.
Well, and then I'd be interested too. How much do rates actually create some earnings on cash in the bank? Like there's some offset there.
Yeah, depends on your
treasury management may actually, get some interest income for once. So I don't know. This is like
there's not much interest income around.
4% is a lot better than
than it has been.
Yeah, nobody's getting 4% at call, 4% on like the 10-year, and then you got duration risk.
Isn't it like 4 on the 1?
Dude, it's like 4% on the 1, and it's like 3.5 on the 10.
That's a good point. That's a good point. That's a good point.
Yeah, you can get 3.5 on the 10, on 6 month.
I check the yield curve every single day. every single day because I want to be the one to call. I'm not going to get it obviously, but I just want to see it happen.
210, is that what you're waiting for?
No, 310.
310, sorry.
I think 210 went through. 210's as deep as it's been.
It's bent over backwards, huh?
The 3 month, like the 3 month moves up, but the 10 years moving up so fast too. Every time I check in, there's a great US Treasury yield curve.com, something like that website that I use all the time. I'll tweet it out. And you can pin the current curve and then you can put in any date and compare. So I go back a month and I go back a year. And a year ago it was a normal looking. Well, it was very.
It's just
low.
laying on the ground, basically.
Yeah, but now it's like
now it looks like a Russian gymnast.
That's right. It looks like a broken finger. I think he said. I agree with that. It looks like a broken finger, but the 3 month has been rocketing up. It's just the 10 years going up faster. The whole curve is going parallel up. It's going to be hard and it's arbitrary whether the 3 month catches it or not, but because you can see how arbitrary it is when you look at the whole curve moving, but it is one of the things that people track, the 310. And that's what Cam Harvey says is it's a precursor to, or it's called every recession. It hasn't had any false negatives since he published in about, I want to say 81 or 83, something like that. Is it as old as that? That seems.
Well, that would only be what?
Cam Harvey's not that old. 3
or 4 then. Data points.
There's a few. There's more than that. There's a few, but it might be 8 or something.
Okay. Statistically significant.
I wouldn't get caught up in this shit. Look at stuff.
It doesn't make any difference. I agree.
Yeah.
But I just
not entertaining, Bill. Come on.
I just want the trigger.
I'm just saying. It's just I mean, look, my beloved curate. I don't own these, so don't think I like them. But it's getting hard not to. I mean, the preferred's yielding 18% cash on cash.
Yeah,
you got to get paid, right? I mean, if it's a zero, it's a zero. But you got par is 100.
Are those cumulative preferreds?
Yeah, but they're going to make the payments anyway.
I would say the bigger risk is you get restructured. I don't think it's a donut. It's that they do something to get themselves out. I don't think that Malone wouldn't let that.
It's possible.
Donut.
Well, I don't know why not. He's got all his cash out. That whole entity funded all the other investments. I mean, if it goes, it goes. But
is this the reef that finally catches the Malone raft that he's talked about? He's floated over a few of them.
Yeah, I mean, it's an old company, and we'll see. It had a lot of trouble. So this, it may be the thing that he takes an L on this. But I'll tell you what, if my version of an L is I take enough cash out of something to put together a deal like buying Charter, I'll take L's like that all day.
Yeah.
You want to be careful leaving too many bag holders in your wake, though. Don't want to be blowing people up on your way through.
They're not bag holders. If you bought stuff now and you take a loss, you know what you bought.
You don't have, but as a manager, you don't have some like moral obligation to not just burn everybody who else is left in the stock.
Well, I just don't look at it as that. I mean, look, we're all big boys, especially if you're trafficking in those names. If you're buying those names and you don't know what you're doing, good luck.
What about if you like Home Shopping Network and what
if you're a grandma?
Peter Lynch,
widows and orphans.
Well, I mean, you should do more work than that.
I'm a Peter Lynch investor, and I like Home Shopping Network or QVC or whatever it is, whatever they do.
Now your back's gonna hurt, Grandma, because you just pulled gardening duty.
Yeah, actually, I walked into my grandma's house and she was watching it yesterday for the first time ever.
CNBC,
and then you got long and
QVC. Matt Hanson's got a comment here about did Burry tell us to short long dated treasuries a year ago?
Yeah, I think he called this whole thing pretty right.
He deleted the tweet though, so we don't know.
He always does. You got to go to Burry Archive. I was going to see if someone could pull up that tweet where he said he sold everything. Was that August 15? Could just tell us how close to the date that he only sold everything. Got the just the prison.
Grantham, Grantham called it right too. Napier, he switched at the right time. There've been a couple of these guys that have been right. To
be fair, those blokes are pretty bearish most of the time.
True.
Yeah, well, that's why. I mean, that's not why I didn't pay attention, but
it didn't help.
Has anybody kind of been short or not short, but just like bearish at the top
Akram's
bullish at the bottom.
razor. Akram's razor on Twitter. When now,
What's
you
the
know,
thesis?
he covers, well, I don't think it was macro, but that guy put out a podcast and wrote a newsletter or an article or whatever when SAS was going nuts. And he basically was like, tell me what all these valuations imply, sell it all. And he's I don't know. He's not perfect by any stretch, I don't think, but he's got some mental flexibility that I think a lot of people could learn from. And now he sees opportunity. I like the way that guy thinks.
I agree that there's plenty of opportunity around. I'm just for bragging rights. I think we're going to get some chaos here before this is all said and done.
You want the Romic better entry price?
Yeah, I mean, I think not so much. I mean, I think that there are a lot of things out there that are just silly cheap at the moment. There's good companies out there that are throwing off lots of free cash flow, high returns on equity, way too cheap.
God, if only there was an ETF that
I'll tell you what,
as a strategy.
Yeah, well, we can't. It's like saying Voldemort. You talk about the Malone thing. I'll tell you what would like really make me actually sour on them is if Charter turns off their buyback. If they turn off their buyback, I was wrong on them.
Oof.
Do you think though, Buffett did the same thing. Buffett didn't not so much turn it off, but didn't really pull the trigger March 2020 on the buyback significantly. And we debated that a little bit on this podcast. And one of the reasons that we concluded was that there does come a point in time where you're like, well, I just got to make sure I've got some resources here to survive. I don't know how bad
this is not that
survival.
They got some debt in there.
But this isn't. It's structured well. Voluntary churn is at all-time lows. Credit quality is at all-time highs. Like this is business cycle stuff. If they're not willing to live through a down cycle, then I've got them read wrong.
They bought back a lot at higher prices, right?
That's right. And I don't have a problem with that as long as you keep doing it. If they turn it off, I'm going to be pissed.
David Wilson says it. Sorry,
that's my whole argument about like these consistent buybacks. I don't mind it that much because as long as it's truly consistent, I don't really mind a management team saying our business is getting bigger. We're just going to dollar cost average over time.
Yeah,
if they start to look to the stock market for clues as to whether or not their business is doing well, and I forgive COVID because that's different. But like once you start doing that, that's a problem.
That's a fair call.
Yeah.
David Wilson says, is there going to be a Big Short 2 movie? I would say 100% there will be a Big Short 2 movie. I don't know if they'll call it the Big Short 2, but there's a movie about Spotify. There's a fictionalized movie about how Spotify was put together. So I can't imagine that that's a particularly interesting movie. Sorry, Danek, I do like you a lot, but I'm not really interested in watching that movie. Is there going to be a Big Short? Yes, there is going to be. I think one of the things that it should feature is Bitcoin, Bitcoin's up 350% over the last 5 years. Have you guys heard of this? BTC is the ticker. You guys ever heard of that?
I heard it's sound money.
It's had a pretty good run.
No, what's the yield on it?
I couldn't find it, honestly.
Okay.
The PE, I don't know.
It's wild how the dollars absolutely kicked the shit out of it after
everything.
Yeah, but I think it's somewhat funny that a huge fiscal stimulus and the dollar's just ripping and Bitcoin is less so.
Macro's hard, turns out.
Well, yeah. Turns out that maybe the Fed does have a backbone.
Yeah. I've been surprised that they've held on this long. I'm guessing that they're waiting until they see the whites of the eyes before they reverse. This is like an orderly.
We might be pretty close. I don't know.
But you've already said like we're not even back down to average valuations. So
you got to stop looking at the index. The fucking index dwarfs and it doesn't pay taxes. You got to look in the internals, man. There's carnage. Has been since 12 months ago, almost.
Yeah. When did your portfolio start going down?
I mean, for real, it's been about a year. So another 6 months is 18 months. That makes sense.
Yeah.
Well, if you're ARK, it started in February 2021. So they are 18
late,
months in now. 19 months in now.
Oh, February 22. You think that was that early?
It was 156 February 2021. I think it's 40-ish at the moment, I think.
No, they also fucking own pixie dust, so I wouldn't.
I reckon
going on that.
ARK will be 90% off peak to trough when this is all said and done.
I'd be pretty shocked if it's only 90.
So that their peak was 156, currently 37.78. So
Yeah, get another 50%.
50% from here gets them to 90%. Well, that's like that old Einhorn joke. What do you call the stock that's down 90%? Stock that was down 80% got cut in half.
Well, yeah, that's a
Tough game.
I
And
wouldn't be-
she levered up to buy that back.
Yeah.
Hope that works out.
Speaking of Einhorn,
Do you know?
You know, he wrote about
I do,
the
actually.
he wrote about that
I
New
know.
Jersey deli that had $100 million market cap. Did you see those blokes have been
Did
indicted
that work
today?
out okay?
Well, they would trade. They were doing wash sales. They were the only ones trading in the stock to create the appearance of trading. Well, this is the allegation. And Einhorn wrote about it. I just saw today that they'd been indicted. They've got 3 guys, father and a son, and somebody else. The son is on the lam. He's
there
in
are
Hong Kong.
still a lot of
Grifty.
there appear to be some big valuations on some things that I'm not sure
survive.
actually have businesses underneath them.
Barry had an arc short on. Yeah. Barry's
Mike.
Barry might be the only bloke who called the last crash, got long-ish, called this crash. Maybe Barry's the man. Amazon went down 95% and they had positive cash flow. Yeah, positive cash flow is the nerve tonic that gets right to the root of your problems. That means you can survive.
Ooh.
JT, do you want to have a chop at the perfect equality line?
Yes, sir. So let's start things off with a little quiz for you two. On a scale of 1 to 7, how well do you feel like that you could explain how a flush toilet works?
3.
I would, yeah, reasonable. I would say, I don't know, 5.
Okay. How about like how a zipper works?
I mean, is a zipper hard? Is it scale 1 to 7?
1 to 7, yeah.
Why is the scale 1 to 7?
Just
I reckon
go
I
with
could
it. All right.
seven for a zipper.
Okay.
I'm gonna go with like 5.
I'm setting myself up here for some humble pie, but why not?
So
here we go.
These 2 psychologists, Rosenblit and Keel, did a study where they asked subjects to look at this list of everyday items, like a flush toilet, like a zipper, a bicycle, and rate their understanding of each on a scale of 1 to 7. So that's why 1 to 7. Now, after recording their scores, they gave people a pen and a paper and they asked them to explain in detail how these everyday mechanisms work. And they couldn't actually. They realized that they didn't understand these items at all. And the psychologists called this the illusion of explanatory depth. And I think we all suffer from it to varying degrees. So this is why writing is such a good forcing function to force you to understand something. Like you have to explain it with a pen and paper, and you start to quickly recognize where your shortcomings are. So now we've all heard of the Genie coefficient. But can we all really actually explain like how it's calculated, how it works, what does it mean, what are its shortcomings? Before preparing for this segment, I would have given myself like a 5 or a 6 on Genie coefficient. But then when I actually sat down to like write it out, I was like, okay, I'm like a 1 or a 2, right? Like, so I think we're kind of all guilty of this. But so let's go through the Genie coefficient and dig a little bit deeper so that you can, impress people at your next cocktail party. So imagine that you take all of the households and you line them up from smallest income to biggest income. And we could do income or wealth, either one can work. But and then oftentimes they will take those and they'll put them into 5 quartiles. And so imagine just sticking all these households into 5 buckets along an x-axis. So that's kind of what my little background is going to be showing here. And then you plot the cumulative portion of income as a percentage for each of the different buckets along the y-axis. So, and this creates what's called the Lorenz curve. So imagine this is for perfect equality, this 45-degree line along this. You take the poorest 20% of households, and then let's say that they would have 20% of the total income. And then we take the 2 buckets there, the 40 percentile or the 40% of the total households, And if they had 40% of the total income, we're starting to have this perfect 45-degree line, right?
So that's what's behind you, right? That's the perfect equality line behind you, if we'd actually reach that.
Correct. So yeah, once we get to the entire, 100% bucket, it has 100% of the income, right? Which makes sense. So how do you calculate then actually the Gini coefficient from this Lorenz curve? And this is the part that I didn't really understand before. You actually take the area between that perfect equality 45-degree line and the Lorenz curve that typically lives in between that. And you find that you take the Gini coefficient is actually a percentage of that area above it compared to the total amount of that curve, or the area under the 45-degree curve. So now that we kind of know what it is, to how it's calculated, like what does it sort of actually mean? The textbook sort of definition of the Gini coefficient is it's the statistical dispersion that represents the income or wealth inequality within a nation or social group. And this was actually invented back by this statistician and sociologist named Corrado Gini. I think it's Genie. We're not sure. In 1912. So like I said, a Gini coefficient of 0 expresses perfect equality. So you can imagine that Lorenz curve follows along perfectly along with that 45-degree line, and therefore there's 0 that's above the line in the area and 100% that's below it. That's how you get to 0. That means everyone has the exact same income. And then a coefficient of 1 is actually like a flat line along the x-axis, and one person on the far right, has all of the income, and all of the area then is above the curve and there's none below it. And that's how you end up with 1 or 100%. So imagine it's like some despotic president who gets all the income and leaves literally nothing for anyone else. So it's a relative, not an absolute measurement. So there's a lot of shortcomings when it comes to that. Like the general trend of higher wealth and income has been this positive slope for humanity for a long time here. And so that's not really represented. And you get some weird anomalies with it. So Bangladesh, which has a per capita income of a little under $1,700, has the same Gini coefficient as the Netherlands, which has $42,000 per capita. They're both at 31%. And it just has to do with the kinks and the weirdness of the Lorenz curve. So
does that mean that the Netherlands is not particularly doesn't have a lot of inequality? Is that what that indicates? Or does that indicate that Bangladesh has?
It indicates
I might let you keep going.
There's a lot. Yeah, it indicates that there's less inequality in both of those. However, one is relatively rich and one is relatively poor.
Yeah, okay.
So, and there's some other things that can impact this. Like there can be structural societal changes, like the number of households can have a big impact on it, because it leads to these measurement errors and comparing apples to apples and apples to oranges, depending on how it's measured. So if you went from if the culture and the structure of society was such where you had a lot of multi-generational housing that counted as one, and then people started living in single generation housing, now all of a sudden we're dividing by a bigger denominator, and that can throw the numbers off, right? So, but just to give some numbers here, like the UK is at 34%, China is at 50%, the US is 42%, Finland's at 25%. And this often quoted case of like the richest 20% having 80% of the income, like kind of Pareto principle, that gives you a Gini coefficient of at least 60%. So it gives you some sense of sort of where everything is. And globally, it's actually like 65%. So there is sort of probably an 80-20 look to global incomes. But it's actually that Gini coefficient has gone up over time. Like in 1820, the global was 43%, which I think sort of is saying that like everyone was fairly poor together. And now it's closer to that 65%, like we said. And that I think my hypothesis is that is like specialization and globalization creates a lot more winners and losers, which then leads to higher Gini coefficients. So anyway, summing this all up together, hopefully maybe you understand the Gini coefficient at a little bit better level, and you could actually write it down in a way that would dispel some of that, that illusion of explanatory depth that I think we all suffer from to varying degrees.
So 0 would indicate perfect equality. 1 indicates one person has all of the wealth. So perfect inequality.
Right.
80-20 would get us to 60%. Was that the number?
At least 60%.
At least 60%. Okay.
Yep.
And generally the lower the number, the less inequality, the higher the number, the more inequality.
Correct.
And the global number is 42, did you say?
65.
65. Okay.
Yeah.
So the US is less unequal, has less inequality
Correct.
than globally. Where do you find the regions that have the highest levels of inequality, that they tend to be more corrupt?
It can be
Strongman, totalitarian.
South Africa actually has the highest.
Okay. What's South
highest.
Africa?
I think it has to do with sort of like echoes and remnants of
number?
apartheid. It's like 63 or something like that.
What's the lowest?
Only
if you have it edited.
Yeah, I don't think I have it on, but it might
be a Scandinavian nation?
I think it might be Finland at 25 or something. Yeah.
What's Finland do? They're small and they've got lots of oil money or something like that.
Yeah, and I think it's relatively homogenous populations help. I think there's, like you said, like there's a fair amount of sort of income smoothing that happens with those countries, like socialistic kind of tendencies.
Which country has the giant oil?
Norway.
Fund? Is it Norway?
I think Norway. Yeah, is that right?
How big's Finland? I forget. They're all much smaller than you think.
They are distorted on the map, right? They look much bigger on a Mercator projected map than they actually are.
Is Mercator the one that makes Africa look really small?
Yeah, right.
That's interesting. I always thought they compare. Yeah, I've always seen the ratio, the Gini coefficient compared as a ratio between two nations. So I didn't know that's how it was calculated.
Yeah, and you could see like how you could end up with very different areas between that Lorenz curve and the 45 to figure out a Gini coefficient can end up being the same number, and yet the curves look completely different. And so they tell very different stories.
Do you have the UK there?
I think the UK was at 34%.
So
you also have to be careful because they have they'll do like pre-tax and post-tax ones.
Oh, I see.
So there's a lot of apples to apple issues that like when we're taking country specific data, they gather it in, everyone kind of has their own methodologies for gathering it. So it's not consistent across countries. So comparing them is actually a little bit of a dangerous proposition.
What about wealth and income? Do you find that there's more disparity in wealth than there is in income?
I think that's correct.
Because you can stack up the wealth over generations, whereas income's sort of somewhat limited.
Yes, I think it's a stock versus flow kind of question. And I think the stock can be a lot bigger than the flow typically.
Iceland has a population of 376,000. It's about the size of the little surfing village that I live in.
Yeah.
Yeah, that's interesting, dude. I'm glad. Thanks for explaining that. I didn't understand that. But now I'll be quoting Gini coefficients everywhere. I think I might have been calling it the Gini coefficient too.
Well, it actually works for other things too. Like it can be used for biology. Like actually heights can be put into a Gini coefficient, and like it's a very small number, right? Like we're all close to a kind of there's not a lot of dispersion amongst a height, relatively speaking, especially compared to incomes.
It's more bell curve, right? Then.
Yeah, right. It's more of a normal Gaussian kind of distribution.
Finland, 5.5 million. There we go. That's quite big. Hit us with your questions, dudes.
Yep.
We
got some time for it.
Pad out this 15 minutes. How's everybody feeling generally? I'm sort of interested in that. The drip of lower prices can be a little bit wearing, but I kind of I started getting excited the other day. I think if we tip into that genuine bear market, my definition of a bear market, we're going to see some chaos, and that's a good time to get set for the next long period of time. They come around very rarely.
Toby Bear.
Yeah, but bullish. That would be a bullish signal.
Yeah.
Yeah, mortgage rates are popping up to 7%. You guys see that?
That's wild, isn't it?
No one's taking them out anyway. Who cares?
Yeah.
Yeah. Volumes have to be just absolutely dried up on that, right?
Yeah.
Also,
mortgage industry is fucked, at least until the rates come down. But
how mispriced are houses right now if mortgages stay at 7%?
They're not going to stay there.
Charlie Bolello had a chart the other day, and that showed mortgage rates, and I just flipped it upside down and says this is what it implies for property prices.
I don't know that that's true. I really don't. I mean, I get why you'd say, well, it has to be, but
What
I
happens?
just-
They just
well,
like we get.
you're not going to have anything hit the market. Why would you voluntarily sell?
So Jeff Weniger, who's I'm going to get this wrong. Sorry, Jeff. I think he's Wisdom Tree. Sorry, Jeff. He said that that's people who've got the 3% mortgages aren't going to trade. People who can't get a mortgage aren't going to trade. But he said there is a very large number of people who've paid off their mortgages who will. And that's where the supply is going to come from. There's an aging
somebody
cohort of
that's
boomers
financially
downsizing.
prudent enough to pay off their mortgage voluntarily sells their house in a time when prices are lower.
Well, they may
Just
be
'cause?
downsizing. Well, they may be downsizing. They may be
Okay,
needing to
so
go
you
into
get
a retirement home or something.
some
like that.
grandma's house that trades at a huge discount because it's got shitty windows that haven't been taken care of in 20 years and has wallpaper everywhere, and then
But if you have to
housing
sell-
crash people.
If you have to
Yeah.
sell,
There will be some forced liquidations, but is that the market clearing price of the average house? I don't think so.
I think it'll trade down a lot.
We'll see. I bet against it, and I'm pretty happy that I have.
I suspect it'll follow the stock market with a lag of about a year because that's traditionally what it does.
Yeah.
What
Well-
about people on adjustable rates that all of a sudden just going to get?
There aren't that
smoked
many
on
of
their
them.
payment?
Yeah,
There aren't that many yet.
that was
Really?
my
Now you're going to
impression.
start to see the arms come out because now the traditional mortgage is expensive.
Well, yeah, no one wants to lock in 7, right? They'll
Yeah, I mean,
gamble
now
on it.
you start to get the cockamamie financing and try to get people, into. I mean, I think this is when things start to get odd in underwriting land.
I got a question.
Hmm.
Is Burry overrated as an investor? I'm going to say no, he's underrated.
I haven't seen his return, so I don't know, but he's
They're
got a
pretty
sexy
good.
story. And if he called this one right, then it'd be hard to argue 2 big macro calls correct, plus sustained strong returns is not among one of the best investors ever.
What did happen to all that water call though that he made? Did that turn
He-
into a good investment?
The
Remember water
Just early,
shortages?
Jake. Come on, you didn't need to read more Bruce Berkowitz, bro.
when he came out with that call, I went and had a look at JG Boswell. Like the moment that I saw it, I went and looked at JG Boswell, and it was up like 20% that day. I was like, damn it, everybody else had exactly the same idea.
Front running me.
Yeah,
What do they do? Where are they located? I mean,
JG Boswell. That's a cotton farmer, and I think they're in California and Australia. But cotton farms are traditionally water intensive, so they have quite a lot of water.
okay.
So that was my reasoning.
Look at you getting your first order reasoning going.
Yeah, look how slow I was getting in there. Missed it, and then I was like, yeah, that's probably it. It's just hard to get financials on them. They don't publish purposefully. Cheap stocks used to track them. I don't know if they do anymore.
Interesting. Where's oil going?
Yeah, that's a good
Lower
question.
than higher.
Yeah. What are we at
Well,
now?
I
Like
mean,
83 or something?
Look, if mortgage rates are at 7 and you're stopping the housing economy, and that's got the biggest multiplier effect, then
Nobody's
what's a
driving.
scenario where oil rips and we have a deep recession? Like, how does that happen?
Yeah. Demand destruction.
Yeah. I mean,
Doesn't that
but
doesn't that imply the other way around? Like oil goes up, yeah. So oil spikes.
well, oil's already spiked. We're on the
Yeah.
backside of that. So everything's already spiked.
Yeah,
Shipping rates, all this shit.
Lumber's
Do you-
round trip now. Hasn't it back to pre-COVID?
Is it
No.
is it all the way there? No, it's
No.
still 50%
No?
over it.
No, yeah. But, we'll see. This hurricane's not great good for lumber, not great for everybody that can't insure their house.
Yeah, good one for
Stimmy,
Blade.
baby.
Nord Stream is down, blowing methane bubbles in the ocean. I saw that. What do you guys make of that? Somebody taking this submarine and going and put a hole in the Nord Stream. I saw the German energy minister said you're not allowed to speculate about that stuff.
Oh, really?
Not allowed to.
Or what? They'll send you a strongly worded letter.
Probably get that DMCA notice to take it down or something like that. I don't know. I don't know how they're going to enforce that.
Yeah, I don't know anything about these matters.
I don't know,
These are
but that
for-
doesn't sound good for Europe, does it? If it's permanent, if it's knocked out all winter.
Yeah, I should just lean into this shit on my podcast and have a bunch of bears on, get ratings like crazy.
Why does everybody think that bearishness does draw ratings, but like
They
you can
do,
be
man.
bearish,
Macro bear porn, people can't turn away from. It's like fucking crack.
but you can be bearish for genuine reasons. Like
Yeah.
you don't have to be bullish all the time about everything.
I don't think I've had like bears or bulls. I've unfortunately leaned into people that pick stocks. I think I should get into macro bears. Hoe myself out a little
boring.
bit. Take my shirt off.
There you go.
Any of the FANG stocks not a zero? I reckon the G's pretty solid. I reckon Amazon,
Nah, they're all zeros.
Apple's are going to be okay.
All zero.
Yeah, definitely 10 PE stocks coming to you in the near future.
You know, one thing I was thinking about, let's just play out like a Peter Zehan kind of fracturing world. Just indulge me in that hypothesis.
Just can you give people give us a little bit of background on that?
Sure. US pulls away from being the world's police and like the world's navy, basically. All these long supply chains that depended upon no piracy and no empire grabs are now much more fragile to people just coming and like stealing the shit off the boat, right? Like that's how most of the history was throughout. So you couldn't have a supply chain where you moved every little piece, 13,000 miles on average to go back and forth all around the world to build it. So if you have a fractured world, then where it's much more localized economies, it kind of breaks up into, in Zehan's vision, the US kind of controlling the Western hemisphere, Asia, kind of fighting amongst themselves for resources, Europe trying to figure out how they're going to get fed. I mean, all of these places, it's about food, energy, labor, which the demographics for a lot of places are pretty little troubling. And then like technological progress and know-how, basically. So anyway, so imagine that it breaks up and you're Apple and you do all the design in the US, all the like IP and smart high value things are done in the US, but then everything else goes to China and the rest of the world. And if China is not the manufacturing hub for Apple like it is today, what do margins look like for them if they have to bring it more closer, more expensive labor? I don't know. It's sort of an interesting
get fucking machines to make all that shit.
Yeah, I think that's right. More automation, more 3D printing. But then one of them, maybe China has to start patrolling the seas.
They don't have a long range navy capable of projecting much power outside of like their coastline. So
yeah, you just build that over time, don't you? Like 100 years.
If you get there.
But I don't think this.
If half your population starves to death before that happens, I don't know if that 100.
It's gonna be hard to have inflation in that scenario.
Are they importing food currently? I mean, look, Japan's doing that. Japan's importing food.
Oh, big time.
All of those countries are importers.
They have very little resources, actually.
Yeah, except they own Africa.
Lots of know-how. Well, China, yeah.
Yeah.
Yeah, I don't know. We might see some imperialism when it comes to when there's no food on the table and there's no gas in your tank. Like you go looking for someone else's stuff then and bring it home. That's been history.
Thunder Blunder, Master Blaster run Thundertown. Oh no, I've messed that up completely.
Come on, Ozzy.
Sad.
Something I said on the Twitter machine the other day, and I do mean this. This is actually advice. It's sort of outside the normal value after hours topics, but I'm going through it currently. I would highly recommend people to have conversations with their parents about how they want to age, who does the power of attorney, who has signing authority on bank accounts, who has signing authority on healthcare. All that shit. They're not fun conversations, but they're conversations that are very important when they're important.
That's a good idea. Don't wait until some marbles are slipping and you have
because you don't have time. Yeah, and if you approach it early, you can make jokes. Like I can still tell my dad, like, I'm gonna put you in the old house, and he can laugh about it, and
lots of diaper
I can
jokes.
let it sit, and then I can talk to him about it. It's not, hey. Now we have to make a choice, because if you get to that point and you haven't had those conversations, it can feel really guilty.
I would also, as I've made this mistake, I think I'm now the power of attorney or the executor of 7 different trusts throughout the
Oh,
family.
that's
and friends.
terrible.
Terrible.
It's too
decision.
many.
Stay
Too many.
away from that if you can. That's my recommendation to you.
Yeah, you got too many, man. 2 you could maybe do, but 7's a lot.
Do not be trustworthy is what I've learned is the
That's good life advice.
Yeah.
Europe might see some wild riots this winter with some 9x energy prices.
Yeah, I think that's a consensus view.
Yeah.
True. No surprise there, huh?
I mean, if they didn't riot at this point, that would be the surprising thing.
Yeah.
Maybe they'd just be too cold.
That was one thing I actually wanted to look up, but I couldn't find it in time, was what is the correlation between Gini coefficient and social unrest? And is there some like magical number where it hits it that like your chances of like guillotine risk shoot up?
I saw Icahn. This is like, I saw somebody quoting Icahn, so I haven't seen Icahn's actual quote, but the quote was that the US currently has the levels of inflation that saw the Roman Empire fall. Having spent a little bit of time reading that history recently, the
Gag me
empire
with
took
a spoon.
a long time to fall.
Like, this is so fucking...
We could be 1,000 years away from the empire falling.
That's when it started to decay.
Yeah, that's exactly why the dollar is ripping. The empire is crumbling in its knees.
Yeah. What?
I like Munger's he said this in, I think, probably 6 or 7 years ago at the Daily Journal meeting. I forget how it came up, but he said that there's still a lot of joy to be found in a decaying empire.
Well, they still own Fruit of the Loom, right?
I mean, Berkshire's got a collection of decaying empires there.
That's right.
Some
That's
good
most
ones
of the
too.
brands.
Dairy Queen.
It is funny going to Omaha and walking around the big auditorium beside where they have the meeting.
Yeah.
And seeing all of those brands from yesteryear.
Yeah.
It's a collection of antiques.
They cash flowing.
They do. Nothing wrong with that. Get the cash cows. You guys ever study that?
Good example of how long a decaying empire can stay around.
True. And grow and get bigger.
Good point.
I mean, look, I think this isn't my thought. This is somebody smarter than me sharing it with me. But I think this is why the Fed is so serious about taming inflation, because they're not going to lose credibility over inflation. They're just not. And if it means putting us into a recession, that's what they're going to do. But like, I don't think this inflation is some existential risk to the US, but I've been wrong on it since the jump. So I don't know why anyone would listen.
I don't really think so either. I think they'll get it under control.
I should have Icahn on the pod. We can talk about how the US is going to die.
There you go. He can debate Peter Zehan, who's like thinks that the US is going to be in just fine.
Yeah, there's nowhere else to ride. You got to ride with the US.
Given the Fed is still buying a whole lot of mortgage-backed securities, how is it that mortgage rates are floating up to where they are? Is that how the Fed's going to? That's how we're going to fund the government mortgages. So you can have.
There's not going to be any now.
You have your mortgages at 7, and you have your 10-year at 2, or your 30 years at whatever, and they're going to be like a bank.
Yeah,
they're just going to clip the difference.
And you got Biden trading the SPR.
Day trading the SPR.
Yeah.
I mean,
this
if they
is
were
the
to buy
further
back some
finalization of America. Good for us. Let's fucking do it.
All right,
Get
fellas,
Goldman in the White House.
We did
it.
We've made it. Well, where's J Power from? He's Carlisle, right?
Yeah.
Got to get those levered PE guys in there, sort it out, break it up, chop it up.
He's probably got a bunch of friends that are going to go out and buy some assets over the next year and get some good carry in 10.
Pretty up the balance sheet.
All right, amigos. That was fun. We'll see you guys next